Hello and welcome to the Ledger Lounge, an accounting and business advisory podcast brought to you by James Scott from Oldham, Greater Manchester. My name's Matthew Taylor.
I'm Katie Allen.
And I'm Lauren Thompson.
Welcome to the Ledger Lounge.
In this episode, we're going to be focusing solely on what's happening with making tax digital for income tax and how, as a practice, we'll be approaching it and servicing our clients.
So, what is MTD for income tax?
Big one coming in April 26.
I feel like this is just going to be Google's top searched over the next couple of months, isn't it, by anyone? It's all over the radio stations now, isn't it? Are you MTD ready?
Yeah.
Yes, I
They're
think
pushing it hard on the marketing side, aren't they? Trying to really get it out there.
Yeah, so we're less than 12 months now until MTD starts, and
it's definitely
this time
coming.
It's really happening, isn't it?
Yeah.
They pushed it back once, didn't they? Twice
Twice it's been pushed back.
This time it's really coming.
I don't think they can afford to push it back anymore, can they? It must
No.
cost them. You just said how much advertising they've done and marketing for it.
Yeah, definitely.
So what it's going to do, it's going to change the way millions of individuals who run businesses or landlords who have property businesses report their earnings to HMRC. In April 2026, if you've got a business that's turning over, and it's not profits, it's income, it's turnover of more than £50,000 a year, you're going to fall into MTD and have to make 4 quarterly returns as well as a final return.
Yeah, so I think that's really scary for people who've only been used to submitting one self-assessment a year and having 9 months to do it. Now they're going to have to make 5 submissions a year, or their accountant.
Yeah, and I think another question that people probably ask off the back of that is, well, I can't afford to do 4. You know, I can't afford to pay my accountant to do it 4 times. I'd rather do it once.
Yeah.
That's what I think somebody mentioned it when we were at DAS the other week about, well, I don't want to pay my accountant 4 times for the same thing, but it's not the same thing, is it? You're doing it quarterly.
Yeah,
That's right. Yeah. So I think the important thing to remember is that even if you do have property income of, say, £5,000 rent from a house that you might be lucky enough to own, and then you've got turnover in a business of £45,000, you're going to be at the £50,000 level because the two are combined.
Yeah.
So
that'll catch a few people out.
Yeah, I think that's important to point out that it is cumulative. And
those turnover thresholds are actually decreasing with each year that rolls by, aren't they?
Yeah.
So we're getting down to, is it 30,000 for April 27?
Correct.
And then 20,000 for April 2028.
So you can imagine that by April 28, that's going to be
a lot of people.
A lot of people are going to be making these returns and these reports.
Correct, yeah.
I think in April 26, they reckon about 780,000 people will fall into the scheme. April 27, another 970,000. That's 1.7 million that weren't doing this.
And now we're going to have
to do it. So there's a lot of work needs to be done.
Yeah. And I think when you're submitting one return a year, you can actually get away with not doing things digitally. You can, if you're a landlord or if you're running a small business that's not VAT registered, you're just doing the one self-assessment submission a year, it's probably been fine that you've been keeping, your paper receipts and maybe a book of, for your rental income, or you've got statements from estate agents and stuff for rental income. But I think the biggest change, as well as the frequency of submissions, is all those people are now going to have to start using a digital software.
Yes.
So there's software costs which are going to implicate a lot of people that probably previously didn't really need to have any software.
Yeah. Yeah.
Which is going to be a big impact.
They would have relied on us to have the software at our end.
They might have only had a basic software package that could deal with what they were submitting, which might have not been very much. Whereas now that might have to be increased.
Yeah, so the digital submission for self-assessment would have been all you needed.
Yeah.
Now you're going to need either your accountant to provide you with something, or you sort your own out. All the major software companies that do accounting software, Xero, Dex, QuickBooks, Sage, are all developing programs or apps to try and help with this. But there's going to be a cost to it. I think did Inland Revenue say there was £320 in software costs
on average per person.
Yeah.
Per person.
Wow.
Which is probably about right because, I mean, I don't know what subscription they'd need for Xero as such, but Xero's around about £35 a month now anyway, isn't it?
I think that's what Steve pays for his, but he gets quite a, he's got
so
quite a good,
around 300
good,
plus a year
package, but I think you can get one that does slightly less for cheaper. But whether they're all going to roll out a special MTD for income tax.
I think they will do, yeah.
I think some of our
plan.
clients won't have, it won't be a massive, it will be a learning curve, but it won't be a huge one for the ones that are already VAT registered and doing, like they're used to doing quarterly returns.
Yeah, so
it's just another one that we're asking them more questions, not just regarding the VAT.
Yeah. It's going to be your smaller people that it's going to affect, which is going to be people who are not VAT registered.
Yep.
And landlords.
Yeah, I think that's the biggie. Is sometimes it's difficult to get the information timely from these individuals. Like, I think it'll be a big thing for us. We'd have to be like on it with them and no, we need it.
Yeah,
it's due. This is the deadline.
So what will we have to do that's different then? What will we be, or what will the taxpayer be doing that they're not doing at the moment?
So all those people that we've just discussed are submitting one self-assessment a year, aren't they? Whereas after the basis period reform, everybody should have the same year end now of either 31st of March to 5th of April. And everybody is going to be on the same quarters. So for the first 3 months of April, May and June, 2026 that is, they're going to have to submit an income and expenses return. And they've got similar deadlines to the VAT. So you get, I think, is it a month and 7 days?
Okay.
So
if you had a 30th of June, which I think would be the first quarter
that'd
end
be the
after
first one, yeah. April, May and June.
Yep.
That would be due 7th of August.
Okay. Yep.
And then everybody's going to have the same deadline. So 7th of August, 7th of November, 7th of February, and then 7th of May for the 4 submissions for income and expenses. And then same as normal, then you would submit a final self-assessment or a final, I don't know what they're going to use it as terminology, but basically a final
return.
Return, yeah. So actually 5 submissions a year versus 1.
Yeah.
Which
the thing I can see from us as accountants is that we need to get organised on this, because
definitely
we've got clients at the moment that have VAT period ends that are scattered across 3 months.
Yeah.
All of these 970 or 780,000 people that we're talking about are going to be doing the filing on the same day. Or the same deadline anyway, if not the same day. So that's going to put a lot of pressure on, one, the business, and 2, the accountant, if they're using an accountant, to get that information in. So
and the software, can you imagine 970,000 people on the day?
Well, that's what usually happens on the 7th.
Yeah.
I mean, the 7th is a VAT return deadline every month, depending on when quarters fall. And you often find that if you are doing things on the 7th, HMRC's phone lines are rammed out. If you want to speak to somebody at the VAT on the 7th, you just got no chance, have you?
And then they normally do system maintenance from the 8th to the 12th or something like that.
Yeah. Recovering.
I think they're all having
pour
a break.
water on it. Not like it overheats.
Yeah, definitely.
But no, I agree. We do need to get something in place, don't we, with how we're going to approach it and with our clients.
Yeah, I think one good thing that's come out of the latest developments in MTD is that they're now going to allow cumulative returns each quarter. So previously they were going to say, right, you file a return for quarter 1, quarter 2, quarter 3 and quarter 4. And if you found an error in quarter 1, you went back and corrected that.
Right.
Now, by filing cumulative returns, it automatically deals with any earlier period corrections.
Oh, right.
So similar to late claims on the VAT return?
Yes. Yeah, same idea there. So,
right, so that's good then.
Yeah, because that would have been even more of a burden, I think.
Yeah,
would have
definitely.
been more difficult. I think any returns you file, you're going to have to make a declaration to say that they're correct.
I think if we get the clients, or if you're listening and you're not a client and you're just running your own business, get used to submitting and dealing with your records digitally on a real-time basis now. Because, I mean, we're in April 25 now, and how fast does the year go? Doesn't it feel like it was just Christmas yesterday?
It does, doesn't it?
So soon it'll be Christmas again, and then it'll be there in our faces before you know it. So I think if you get into the habit now, it's probably going to be much better than when it's actually due and you're on April 20. It's in April 26 and you're on the deadline and you're thinking, oh, I need to start doing this now.
So preparing for making tax digital
really important. I
is really
think.
important. So what do we need to do?
Plan ahead.
Go to an accountant. If you haven't got one, come and see us.
Yeah.
Get yourself set up. Get on a software. Do some software trials. I think if you're not on one anyway, we use Xero because we think it's definitely the best one. But trial it out. Come and see us. Get used to not shoving all of your receipts into a shoebox or whatever you may use, a plastic box or bag or whatever. And because that's what a lot of people still do. I mean,
I think on the flip side of that as well, if they, like you said, if they use this year to train themselves,
yeah,
it's
into
less of a burden on them to scramble around after the year end deadline.
Yeah,
thinking, oh, my accountant sent me an email, I need to send them my stuff. Where is everything?
Yeah,
or waiting for the estate agents to send them their annual. They'll be getting them quarterly. Like they've got to change the way that they process things.
Estate agents are going to have to change, or letting agents are going to have to change. Providing that information. I think it's important to deal with it. Start to deal with stuff now. Don't put it off. If you've got an accountant, ring your accountant.
Yeah.
Talk about the timelines that you're going to have to put in place up to April 26, and then what you're going to have to do ongoing from there on, and how it's going to work, because there will be a learning curve, like you say, Katie, getting used to it with.
But then the outcome
software.
of that is that they become that used to it that it's not a stress, because they're just doing it daily, weekly, monthly, whenever they're doing it. We're submitting them quarterly, and they know quarterly what tax is due. They can actually budget their own income a little bit better.
They can, which is
there's nothing worse than doing a tax return on the 31st and then having to ring that client and say, oh, what you earned last year, you've now got to pay 10 grand today because you've not sent us your stuff for 9 months because you couldn't find it.
Yeah. I think as well, it'll give people who probably don't speak to their accountant more than once a year, there's no sort of choice about it. They're going to have to speak to their accountant now at least 5 times a year.
Yeah.
But it gives them, I think, a better insight into their finances, which is another positive of it.
Yeah.
I mean, I think a lot of people talk about this coming in a negative light, which I can understand a bit, but there's also positives as well, that these people who were only hearing what they earned once a year are now going to be looking at it themselves every 3 months. So you've got a much better track of how you're doing throughout the year rather than waiting until the tax year's finished, plus maybe 6 to 9 months later, finding out, I earned, I don't know, 40 grand that year.
Yeah.
Whereas doing this now, you're going to know exactly what you're earning every 3 months.
Yeah.
So budgeting as well.
Yeah, and it's the same with like the government. I can't remember where I read this. They base their budget off the UK taxpayers' returns, but it's always out of date. So the budget that they've got this year is based on last year's figures, but if they're doing it quarterly, they can actually put a more
I think that's probably the whole point
better
of it,
budget in
They
place.
want
so.
real time
I think
information.
They can make better decisions.
getting back on the preparation though for MTD, I think one key thing we need to do is separate your business and your personal finances.
Yes.
Make it easy to make those returns. So if you're a sole trader and you use your personal bank account to receive your trading income and you make your purchases out of that same account, go and get another bank account. It doesn't necessarily have to be a business bank account. It just be a separate bank account.
Yeah, just a separate
use it.
current account.
Yeah.
Which is free usually.
And transfer money into your own personal bank account. Then when you come to make the returns, you've all the information to relate to your business is in one place.
Yeah. That would potentially save on the cost of it as well. If you are using an accountant, if you separate your personal and business spends, the accountant's got less to do. And then obviously if you've got to sift through hundreds of personal transactions, that's going to cost more than if it's just all nice and clean and wrapped up with a bow on it in a nice separate bank account. So if people can do that now in preparation.
What Lauren's saying is do it now.
Yeah.
Do it now.
No, the answer is do it now, isn't it?
Well, yeah.
And I think there's lots of help out there as well. So you can't just rely on your accountant as well. There's webinars, there's training for software. Talk to your accountant first. Find out what the plan is.
Yeah.
Learn how to implement that over the next 9 months or 12 months as it is. And then when it comes along, like you say, Kate, it's a smooth transition into the process.
I just think I can just imagine how many people are going to have such a headache next year if they just put it to the back of their mind and, I'll worry about that next year. Yeah. And then when it comes to it, like you said, you've only got 5 weeks.
Which is not a long time.
It's not a long time. In that 5 weeks, you've got to, if you've not got an accountant, you've got to find one.
Yeah.
Get your paperwork to them, set up your software, learn the software and get it submitted.
Yeah.
Within 5 weeks sounds like a long time, but it's not.
It's not.
Especially when the accountant might have 35 others to do in that month.
Yeah.
You're not the only person, are you? You know, so it is quite daunting.
Some people have quite complex tax affairs as well. Yeah. So you might have 2 self-employments.
Yeah.
You might have multiple properties.
Mm-hmm. Yeah.
You might have a property that you own with somebody else. So all of this, when you're making the choices of software, make sure that software can handle those little complexities.
Yeah, definitely.
So that you can again smooth that workflow when you need to do it. Because I think MTD requires you've got to make a return for your property income, I think, and your self-employment income
as a separate.
Yeah, so the different businesses.
So would the people with, say, 2 self-employment businesses, 2 properties, they'd actually be making 4, or would they?
It'll be 1 submission
per business.
But there'll be 1 submission per person. But if you've got multiple businesses in there,
but there'll be branches off that submission.
Yeah.
Wow, there could be pages and pages long.
There could be,
if you've got like
yeah.
different interest in different companies or whatever for somebody.
But there are some positives to MTD. I think people's accounts will be more accurate because they're based around digital account record keeping.
Yeah.
The memories will be better as well because you can ask them a question about what happened 12 months ago and you're never going to get the answer. But if you're only asking them what happened 3 weeks ago, what was this transaction? Oh, I've got that receipt. It's on my desk.
Yeah.
I've not thrown it in the bin yet.
And
I'll text it.
What we touched on before as well, it'll give individuals a much better insight into how they're doing.
Yes.
More often, more real-time sort of structure.
Yeah, if you've got if you're contacting your accountant 4 or 5 times a year, then you can talk about tax planning opportunities.
Yeah.
How are you doing? I think anything that improves the collaboration between you as a business owner and your accountant is good.
Yeah, if for instance you got to the 3rd quarter whilst you were submitting these MTD returns and you suddenly had a brilliant quarter and your sales had doubled, right, well, we know that your sales have doubled now. Let's put this away for tax, put it into a saver. So I think that's a positive.
Yeah, you can manage it better, can't you?
Or on the flip side as well, if it's decreased, we can obviously see that because we're doing the quarterly return and we can go, why has it decreased? What's happened? Is there something wrong with the costing, with the pricing? And that person can then address those issues within their own business, which they probably may have missed before because they're only doing once a year and speaking to their accountant once a year.
They're looking at the current and not what's happened in the past, and you can't change the past, really.
Yeah, so you're looking at your figures ahead of the tax year end, which can only be a positive, I think.
So at James Scott, we've decided that we're going to do a pilot.
Ooh,
so we're going to start in this month. We're going to register a couple of clients with the HMRC's beta testing or their pilot program. ones that are already VAT registered, so they're already got they're used to digital record keeping because they've been doing MTD for VAT for 6 or 7 years now.
Yeah, 7 years. 2018 was it?
And then we can learn what the new pain points are.
Yeah.
So that when we talk to other clients who perhaps haven't had to do this and are being compelled to do it, then we can advise them correctly and hopefully smooth out the workflows for them and make life a bit better for them. And we've got team training as well.
Ooh.
Again, in a couple of weeks' time, where we'll be going through the process, making a decision on which software we do use.
Yeah, that's going to be a really important, I think, turning point for us as a practice, because we need to get everybody on board with it, don't we? And everybody's on the same page. We know what we're doing and we need to start contacting clients pretty sharpish, don't we? Really?
Yeah.
Be interesting to see what other accountants do as well. I can see other accountants who perhaps aren't as digitally forward as we are, not wanting to maybe just shutting up shop or...
Yeah.
Well, there was a few,
as well,
weren't there, when the MTD for VAT was obviously coming into play, and there were quite a few that left it and then just retired and said, I'm not doing that.
Yeah.
So, yeah, I bet there'll probably be.
Well, some people don't like change, do they?
Yeah. I think the moral of the story on MTD is...
Start it now.
Start it now, yeah.
Yeah.
Don't wait till next April, because it'll probably be too late then.
Yeah. And I think not just us, but all accountants, when this comes in, are going to be super, super, super busy.
Yes.
Yeah. I think getting on board with a good accountant beforehand is really important.
Yeah.
Great words.
So come and see us if you haven't got a good accountant already.
So do you think that MTD for income tax is going to make save time for individuals?
Yeah, but I also think in the beginning it's going to take them a bit of time to get used to it. They'll have to be trained. They'll have to be trained on software. Probably would have never have spoken to their accountant as much as they will do in the beginning. But eventually they'll be moulded to just, I don't know, get up in the morning and be like, oh, I need to do this. They won't feel like they're spending time doing it, because it becomes part of daily, weekly, monthly life.
It becomes the norm.
Yeah. I think we've seen at James Scott that when we've used digital processes, that we save time on everything. Otherwise we won't be doing it. Whether it be receipt capture, whether it be bank feeds, whether it be bot processing.
In fact, I don't think I've ever had a client in the past say, this is taking me too much time. You know, me taking photographs of my receipts, because you've always got your phone. Well, I have. People have always got the phone in their hand. They don't see it as a chore or another job that they've got to do. They're just thinking, done.
And just think how tidy the vans are going to be.
Yeah, there's no
paperwork when they open the door, and there won't be paper drifting down car parks or whatever.
Steve's van still looks like that.
Well,
I've actually received in the past, a long time ago, some books from a client and like a self-assessment and like a bundle of papers all stuck together, and I thought, oh, what's that? And it was a McDonald's burger stuck in between, like all squished. It had been there for, obviously. It didn't go mouldy though.
They don't, do they?
No, it weren't mouldy. I was gobsmacked.
I swear there's like a live YouTube thing where somebody's left like a McDonald's burger that they've bought in, like, I don't know, 2001. And it's just still there.
Yeah, still there. But it'll stop that. It'll stop all the grubby paperwork.
Don't let your accounts go mouldy. Yes, thank you.
Stop going to McDonald's. But yeah, you're right. People's vans will be a lot tidier.
Steve.
Do we know what the fines and penalties are going to be for not filing your quarterly returns?
So as with everything within the revenue, there are penalties if you don't comply with these deadlines. So I think it's done on a penalty point basis. So for every missed submission, you'll get a point. And unfortunately, points don't make prizes in this.
They're not club card points either.
No, they're not club card points, no. You'll so I think once you get to 4 penalty points, you will incur a £200 fine.
And that's 1 point per missed submission.
Yeah. Per quarter,
yeah. So the points last for 2 years. So if you're at the maximum and you're going to keep getting a £200 fine, each time. So
I'd
it's
imagine
going to
that
rack
they'll
up.
increase that as well.
Yeah.
Yeah, I imagine so. It depends on uptake, I suppose.
Yeah.
Although they've never increased the self-assessment penalty since 1996.
Yeah, the £100.
£100 in 1996, and it's still £100 in
the year I was born.
2025.
I can imagine that they're going to be really strict with it anyway, aren't they? Because they want everybody to be doing
definitely.
this.
I think they've pushed it back that far that I think they're ready to go, aren't they? They're going to have it all in place and set up, and because they've pushed it back.
Yeah, I think
this many.
Yeah, the penalty regime is probably set up to get those people who don't comply. Because 4 misreturns is quite a lot of misreturns. So it's somebody who's never going to do it or isn't interested in doing it. So
that's basically somebody who just doesn't do it for the first year.
Yes.
Yeah.
So
who just puts it behind them and thinks, well, I'll just worry about that another time.
Or perhaps people,
or somebody who's
older.
only just set up as a sole trader who doesn't even know.
Which is again why it's important to seek the advice of an accountant.
Yeah,
it is. Yeah,
because there will be a lot of people that have now currently employed that think, oh, I'm going to start up my own plumbing business.
Yep.
They won't know that they need to do that quarterly.
And I think
they've probably not registered for self-assessment at the same point either. So HMRC won't know.
Yeah. So, and the older generation, I think, as well, that are not as online as much as probably we are.
Tech savvy.
Yeah, they might not even know it's coming. And if they haven't got a tech savvy accountant who knows that it's coming and is advising them now, then they could end up in that predicament where they miss them and they get the points and they get the fine.
I think that's our responsibility as much as to educate our clients as well, which is something we're going to be doing so that we don't have that issue.
Definitely not. Well, I mean, we won't, will we? But I think if you've got an accountant that's not particularly tech savvy, then I think the questions need to be asked now.
Yeah.
What's the plan? What are we doing? What are you doing as a firm?
Yeah, yeah.
And, if they don't,
because they're relying on their accountant as well, aren't they? Because they're paying them for a service.
Definitely. I think the accountants are going to be propping these people up for the first few years until they get used to doing it, and obviously helping them to get used to it. And
well, if you don't want to pay huge accountancy fees, then listen to what we said earlier about planning and avoid those fees so your accountant's not propping you up.
Well, yeah, make it as easy as possible. And then obviously the fees won't be as much as they would be if you submitted a bank account with 1,000 transactions in it that is basically
Domino's,
your life, your mortgage, your gas and electric and all the rest of it. Yeah.
The Ledger Lounge is brought to you by James Scott Accounting and is hosted by Matthew Taylor, Katie Allen and Lauren Thompson. For more information, visit jamesscott.com. This podcast is recorded at and produced by KUPOD Productions, audio by Matt Dean and video by Eddie Corteen. For more info, visit kupod.co.uk.